a new initiative taken by SEBI to protect investors. SEBI has just released a consultation paper on the disclosure of risk-adjusted returns by mutual funds, asking feedback from people like me before it turns into regulation. It is basically asking for more disclosures and transparency from mutual funds on the risk they take. But wait, don't we already have the riskometer? A simple way to understand how much risk does the fund actually take? Do we really need more? Well, for informed fund selection, knowing risk-adjusted returns is mandatory. Imagine investing in funds by only looking at their past performance. Performance only tells you half the story. What if someone was doubling your money every day? You'd be stoked. You would have found the solution to all life's problems. You'd sell your house and give it all to him. But then you came to know that all the person was doing was going to the casino and betting all your life savings on red at the roulette table. Now you are aware of how the money was being made. Specifically, how much risk is being taken to generate that return. The risk taken to generate the return is the other half of the story that SEBI wants the investor to know. Obviously, large distributors have their own fund selection philosophy like we do, where we select funds on the basis of a host of qualitative and quantitative factors, including risk-adjusted returns. But do individual investors know? And that's what SEBI is trying to fix. So what exactly is the new information that you will receive once this comes into effect? You will be provided with the information ratio of the fund. Great. But what is the information ratio? It compares the excess return of a fund to its benchmark divided by the volatility of the excess return. In other words, if a fund manager is consistently beating the benchmark, then the fund will have a high information ratio. If you're choosing to invest in an actively managed fund instead of the underlying benchmark, then you want the fund manager to consistently beat the benchmark. And don't worry, SEBI is also prescribing how everyone will calculate the information ratio so that there is no deviation in the reporting, or the deviation is standard. Get it?
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully before investing.